Well, I think you certainly saw what happened on the public side the day after the election. I think that what the public market and also the private market looks at from the positive side, it says, look, we are clearly going to go into a less regulated environment. Blaine talked about it earlier in terms of the restrictions on antitrust, on transactions. That is probably going to go away. In terms of any fiscal taxes going up, anything that has a friction cost associated with deals, I think it is a much more favorable environment for capital formation, whether it's public or private. And I think the markets have reflected that. And I think when Blaine talked about the deal activity increasing already, it's a reflection of that. People are saying, good, we will have a less regulated environment, a better fiscal environment to do deals and for businesses. Businesses will just have a freer hand. So I think that's the positive. I think what people just don't know is, will tariffs increase friction cost? How do you factor that into how you think about what's going on with your company? How do you think about that with what's going on geopolitically? And what happens with interest rates and inflation if the U.S. economy is growing at a faster pace than we may have anticipated a year ago? What happens with that? I don't think we know. I mean, if you remember in the first Trump administration, the first year, the market was up very strongly, and then it went down the second year and then was better in years 3 and 4, although you had the pandemic, obviously. So I do think the markets have reacted positively. I think both public and private. I think that will continue for a period of time. But we have to see what happens in terms of what legislation actually gets passed and what that regulatory environment looks like. But I think right now the markets have clearly said it will be a net positive. And so you will see more deal activity. You will see more money flowing into both public and private markets.